Hey traders, welcome back to another edition. Today we're going to talk about Forex trading, trying to give you a little high level explanation of what Forex trading is and what it's not. So let's just jump right into it. Now Forex trading, as you all know, is basically we're looking at the strength of one currency pair relative to the currency pair that it's paired up with. Now in this video here, we're looking at the US dollar relative to the Canadian dollar. And as you can see, starting here in June, going all the way down to September, the US dollar was relatively weak against the Canadian dollar. So in this particular situation right here, you would definitely want to be short the US dollar, long the Canadian dollar for this currency pair. Then in September, it looks like we start to have a reversal and the US dollar starts picking up some strength and it moves sideways for a couple of weeks before ultimately falling back down again. And now starting in 2018, it looks like it's starting to reverse again. So when you get to a situation like this here, you got to ask yourself, is this truly a reversal, or is this a situation where we're just having a momentary pullback before the US dollar continues on a downward trek against the Canadian dollar? Now, one of the ways that you can kind of come in here and examine this pair, right, would be to use a simple moving average and a trend line. And I'll show you exactly what I mean here, okay? And this is real simple. This is like one of the first things that I learned when I first started trading. And it works relatively well. And just remember, whenever you're trading, you always want to use some type of confirmation tool. All right. Well, I'm going to say you always want to use it, but it's always a good idea if you can to use something to kind of help you confirm what you're thinking. And then also, too, it's a good idea to just remember that when you're trading, there's a certain mindset that you got to have for trading versus if you were just working a 9-to-5 job. One of the things that I noticed out there is a lot of people lately has been getting scammed by these guys online, just been taking their money. And the reason why they've been able to take their money, it seems like, because they've been promising people, oh, if you just send in a couple of dollars, I'm gonna make you super rich within the next 2 or 3 weeks. I even had somebody approach me with that, and I was like, no thank you. Because at the end of the day, if you understand how currency pairing works, if you understand how to trade currency markets, you'll be able to identify when these people come up and they're offering all these great things and they're trying to scam you. You'd be like, no, thank you, right? How's the old saying go? If it sounds too good to be true, then it probably is, and that's absolutely the case. So always be aware of these scammers that's out there that's trying to take your money. You work too hard for it. Don't just give your money to anyone, okay? So now what I did is I used 2 different moving averages here. I used a 10-day moving average and I used a 20-day moving average, and I'll tell you exactly the reason why. I use a 20-day moving average because there's 20 trading days out of the month, right? Not including Sundays. I'm just counting Monday through Friday, especially when I'm looking at a currency pair for the US dollar, Canadian dollar, right? Because the US markets are not open on Sundays, nor the Canadian markets open on Sundays, okay? Then I used a 10-day moving average because 10 is half of the 20-day moving average, right? So that means I got a full month of trading information, and I also got half a month of trading information here. So that's a lot of information to give me to kind of process whether or not we are getting ready to fall below the average over the last month, or we getting ready to go higher than the average price over the last month, okay? The next thing we want to do is I want to add in a trend line, and the reason why I want to add in a trend line is because a trend line is going to help me understand where I am relative to the current price, which is always important. Let's see here. Well, we can take it from here. Let's see. So we'll go here. All right, perfect. So in this example here, you can see price is trending down, right? And my 20-day has crossed over to 10-day, so that lets me know that price is actually going to be moving lower, which makes sense because it's trending down, right? And so now, should I be buying during this time or should I be selling during this time? Right, I should be selling during this time, right? Because price is trending down. You don't want to try to buy when price is moving down, because if you do, you're going to get pushed out of the market. And as you see, price is going down, going down, going down. Now, there was a point here when price crossed over, but once again, what are we going to do? Are we going to buy or are we going to sell during a downtrend? We're going to sell during a downtrend. So we would look to get back in here when price crosses back over. Now, this is, like I said before, this is a pretty simple setup here, all right? And then you can look when price crosses over. You come in, you set up another trend line. Okay, set up another trend line. And as you can see, price crossed over the downtrend line, is going up. The 10-day moving average has crossed over the 20-day moving average, confirmation that price is going up. So you'd be looking to buy in this area here, right, all the way up until when you see price cross below your trend line. Then once again, you're not looking to buy anymore. We're looking to sell. And as you can see, when the 20-day crosses over the 10, it's an indication to go in and start selling, right? This is a pretty simple setup that anybody can learn to do. Now, is there a little bit more to this? Yeah, there is. There's going to be the whole money management. You got to learn. You got to know exactly how much money you're going to be placing on a trade. And then also you want to know where your stop loss is going to be at. Where are you going to place your stop loss to be able to get out of the trade. Now, as you guys know, I don't like to make my videos too long because I just think that, for one, my attention span is not that long, and I don't like sitting here watching hour-long videos, so I'm not going to make an hour-long video for you to watch. If you can understand this little simple setup here, right, and if you can understand the idea of why this simple setup works, then you're 95% of the way there, right? The other 5% that you need is when you go and download our course, our free course, by the way, right? That kind of goes in and starts filling in some of the blanks for you, right? As we start talking about, the money management, the mindsets that you need to have, and the where do you put your stop losses and things of that nature at to make this trade more profitable for you. Okay? And please, guys, once again, stay away from these scammers. Stay away from these people that's out there that's trying to take your money. Pretty much the information, all the basic information to trading is pretty much free out there. I mean, the stuff that people are paying for, the more complicated stuff. And don't get me wrong, some of that stuff, it is relevant. Some of that stuff, it does have a place in trading. But I think that you would get more out of it if you understood the basics and understand the fundamentals behind it, right? Understand why a 10-day or a 20-day moving average makes sense and how it works in combination with each other. Why it makes sense to only, look at the 20 when it crosses over the 10 when the market's trending down, and why it only makes sense to buy when the market is trending up, And when you understand those fundamental basics, then when you start getting these, harmonic patterns and harmonic indicators and all this other stuff, you got a little bit better understanding, or when you trade, or if you can understand how to use a Fibonacci indicator and how to place it on the chart yourself, right? Then when you start seeing these other indicators, these little, EAs that, give you all these random buy and sell indicators, you're going to be able to understand if it makes sense what these people are telling you about this indicator, or if it doesn't make sense. Okay. You got to be real smart with your money. You got to protect yourself, especially if you're going to be spending money out here. Okay. Now, the other thing, before we wrap up this, I just want to let you guys know, like I said before, all the video, all the information that we have for you out on our site, on our channels, is free information for you guys. We hope you enjoy it. We make our money through our affiliates links, and all we ask is that if you're going to be buying something, that you'll please use our affiliate links and purchase through there, because that's how we make our money. If it's something that you're going to already be buying anyway, and you happen to see that we're advertising it on our affiliate links, please use our affiliate links, so that way we can get credit for it and we can get paid. Okay? Hope you guys enjoyed the video. If you got any questions, please hit me up. We're on Facebook at Forex Tech Magazine. We're also, online, forextechmagazine.com. We're on Twitter. Hit us up. We'll try to answer, everyone that sent us in a question. Look forward to seeing you in the next video. Take care.